Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Tuesday, April 12th. Well, theme of the day is fade from early gains. Fade from early gains. Very difficult, even though this market, I think it's been a little bit oversold to the downside. Still, when we open up 1%, it's just in this type of market is just begging for profit taking, which is basically what we saw for the day. Risk disclaimer in front of you. Everything that we're going over is for information purposes only, not giving out any advice or recommendations. You can read the whole risk disclaimer here. So once again, we started, like I said, we started positive for the day, but we finished down. SPYs finished down, what, 40 basis points. The Q's also about the same. IWM actually finished in the green for the day, believe it or not. I think at one point it was about flat for the day, but it did finish positively. We'll go over all these charts, and the VIX was down just a touch. There was one other thing to highlight too, is that the bonds got a rally this morning, and they could not hold on either. So let me go over that first. I spent a lot of time in yesterday's video talking about bonds and about oversold and the pressure right now that they are exhibiting towards stocks, right? That is going to continue until these things kind of bounce a little bit more, in my opinion. So I really think that the bonds need to bounce. They need to have a more meaningful bounce. There was a bond auction today that did not go very well. Which I think was the 10-year, even though I've got the 30-year. I think the 10-year is ZN. I always look at ZB, but you could look at ZN in here. This is Treasury note, 10-year Treasury note futures. But they kind of lost it. I guess it was even more pronounced than ZB. But here's where they really kind of had a hiccup for the day. And, I think that equities want to see at least a relief bounce here. And I think that will help. And, we talked in yesterday's video about that there are models tied to this, right? So if treasuries rally a little bit, which means yields go down, you will probably see a little bit of a move back into some of growth stocks, for how long, I don't know. But that's kind of, I think, the trade, and that's something to keep in mind, because I thought that was pretty evident today. And as soon as this happened, let me go back to this 5-minute chart here. As soon as this happened, you can overlay what time this was at 1 o'clock. And as soon as that happened, you started to see this VIX kind of kick up here. Same thing, that was kind of the high of the afternoon. We settled back down a little bit, but you could see where, this is the VIX. And remember, all the VIX does is it measures implied volatility for short-term S&P options. So S&P 500, right? It doesn't do anything else. Right. But there's some connection between what bonds are doing and the VIX, which again has nothing to mechanically, they have nothing to do with one another. But there is a relationship right now with what bond yields are doing. They are weighing on stocks pretty heavily. Right. So you could review that video from yesterday. I went into a little bit more detail. I don't want to take up the whole video with that. I do want to talk a little bit about, what we kind of saw, and, in the beginning of the day, I was trying to illustrate this as much as possible, that we kind of ran into that resistance. I think I even put this on Twitter as well. I said, watch that 4449.25. Now, we actually did have a bar or two that closed inside value, but we could not hold it. Once we kind of came out of that, you could see what happened. So we basically returned back to the lows. So, there's nothing really much to kind of really say that's interesting. I would continue to watch that level. I would also continue to watch this 4424 level, right? That was my other question for the day. And because we went over this pre-market, I said, will we actually get back above the 50-day moving average, as well as the top of the April value area? We have not been able to do that. And that was another rejection. So until we get back over that point, my view is very much, I let the technicals kind of judge it for me, basically. But I don't like it, right? I don't like when price is below number one, I don't like when price is below the 200-day moving average. In this case, with this kind of weird setup, the 50-day moving average was below the 200-day moving average. So, giving that the benefit of the doubt that we were going to stop there, I was kind of holding out, saying, hey, well, we've got the 50-day moving average to the top of value, and we've broke into both of those. So it kind of tells you right now, how fierce the selling pressure is right now. That's something to kind of let play out, right? There are institutions that are selling, right? And right now, lately, and this may switch, but right now they're just using every opportunity to sell as much stock as possible, right? And that doesn't really come up too much in the fund flows. I put out a fund flow because I don't put out the fund flow data every day because it's very noisy, and I get more questions about some of the noise that's contained with fund flow reports. But you have to keep in mind when funds are selling stocks, that doesn't show up in the fund flow data, right? And the fund flow data is mainly what retail is doing. What I did tweet out this morning was that there was a pretty large, finally, there's a little bit of selling by retail, right? This is VOO. If you're not familiar with what VOO is, right? It's like the sister or brother fund of SPY. Why would somebody trade VOO or IVV, which is another Ida Victor Victor is another ETF that it's the same exact thing as what SPY does, right? It's just a different product wrapper that tracks the S&P 500. So exact same performance, but it's the management fee that's different, right? So what an RIA will use, a registered investment advisor, if they're doing like an asset allocation model for private clients, right? For retail, they will probably choose VOO for long-term over SPY because of the management fee. And I'll bring this up for you just to illustrate. Sorry, I didn't want to go off tangent, but maybe this is something that might interest you, right? If you look at the fee, right? So where's the management fee? 9.5 basis points. There's been a fee war that's been going on. If you're not familiar with the ETF product, right, they've been really trying to capture assets. So some of them keep lowering their management fees. So this is one of the cheapest products out there. Does the same exact thing as SPY does, but the management fee is only 3 basis points. So you actually save yourself 6.5 basis points. So where am I going with this? Well, I'm just illustrating that what kind of money tracks this. So this is not really a trading vehicle. The volume is very, very, I'm sorry, not light, but it's much lighter. For example, like if you look at this, I am getting into the weeds. The average volume is 5.4 million shares versus SPY, right, is 81 million shares. But as always with an ETF, the liquidity is derived from what it tracks, and it tracks the S&P 500. So it is super liquid. Always know that. I always get questions about that with an ETF. Oh, well, I don't know. The ETF only trades, 100,000 shares. Well, what does it track? Right. That's where the what's called implied liquidity is derived for what it tracks. Regardless. That's why someone would go into VOO versus SPY. Now, there was a pretty decent size outflow in the VOO. So it's one of the first ones that we've seen in a while. And, it's pretty amazing that just retail hasn't really done much in terms of, most of it is longer term stuff, but finally there was an outflow. Sometimes I think the outflows are actually bullish when that happens. So, again, I'm not saying that this outflow is, but finally there's maybe some money coming out of, some of the longer dated ETFs. But I think really what's been going on here when I refer to the nonstop selling, it's in individual names, and that's not going to come up in fund flow data. All right. People don't put that sometimes together. So what do I want to see here? And it is possible that this could shake itself out so that it's a left shoulder, a head, and a right shoulder, right? And inverted head and shoulders. But that's way too early to decide that. I would let that play out, and I would let some levels such as 4424 that needs to be retaken. The 200-day moving average also needs to be retaken, and we certainly need just to see the selling to basically chill out. The selling pressure has been going on now for a couple weeks. So, and it's been pretty dramatic. When we look over at the Qs or NASDAQ, right, you could also make that same case for a possible head and, inverted head and shoulders, left shoulder, head, or right shoulder. but there's way too early to come up with that conclusion. The other thing too is, it's kind of like, I don't know what these pictures are called, where like there's one painting, for example, when you look at the image one way, it looks like, it could look, some people see an old woman. When you look at the image another way, it looks like a young woman. So just like you may be looking at this and saying, oh, this could be an inverted head and shoulders, well, you also have to give some basis to that. This could also be a head and shoulders top. So either one of these things are not really played out yet, right? So you need more time. And being patient, I think, really makes sense here, considering that you've got possibly a left shoulder, a head, and some type of maybe a double right shoulder, right? Again, these patterns aren't perfect either. So bottom line, what I try to do is let it play out. And I try to act a little bit more disciplined when the indices break levels like this. So S&P is what I'm mostly concerned about. We know that this NASDAQ has not been where the momentum has been in 2022. I think it comes back. I would let the price action prove it to me first, but we're seeing too many things not look right now in the market. SMH, for example, right? This, NVIDIA, AMD, these things started up 2% for the day, somewhere around there, right? And they finished lower for the day. So that concerns me, because I view NVIDIA, like, I would never short this company. Somebody asked me a week ago, and I was wrong. And I admit when I'm wrong, but somebody asked me about shorting NVIDIA, and I'm like, well, I'm never going to short NVIDIA, especially after it goes down multiple days, because it's the best company out there. When I'm looking to short something, I always short the weakest, right? Just like when I go long something, I'm always looking at going long the strongest, right? But there's something wrong right now with this group, and it's concerning, because I think that this is a great company. So letting this play out, trying, and again, I'm involved in this market, so I get frustrated just as much as anybody does, and tormented by putting on a trade and then it go the wrong way. Alcoa was an example, but what I'm basically trying to say is that if you could try to stay out of this market a little bit, I'm in it every day. I run a trading room, so I'm there every day. I'm never going to basically say, hey, I don't like this market, I'm going to go for a walk the whole day. Sometimes I do take a little bit longer walks when I don't like the price action, but for the most part, I'm in front of the screen every single day, because it's my job to do that. But that doesn't mean that I'm going to like the environment. And what I tell traders sometimes is like, hey, this isn't such a great day. Go feed the ducks. It's better just to go out and do that than try to make money in a very difficult environment. Depending on what you're doing. Some of you are doing a great job shorting, but that's a whole nother conversation. All right, so here's the trade block. So speaking of trades, right, here's what I did today. A couple of things that went the wrong way. NTR. So let's talk about a couple of things that went the right way. The names, that the agriculture names, the fertilizer names, they are continuing to do very well. I actually tried to trade a little bit of CF in here too today. There was a headline that caught me off guard, saying something about Ukraine's fertilizer crop may actually be very good. I read that and I just decided to get out of the CF trade that I was in this morning. It turns out that headline had no effect on the trade, so I got out of it a little bit too early. I actually traded some snow this morning too. There was option activity, but I did not. It's too hard. If names aren't going to just blast off to the upside, this is what Snowflake actually finished up 1% for the day, but I was trading it like on a momentum play, thinking that Snowflake could get up to basically 225. I got one target out of it, which was 220, and I was lucky to get that because I don't even see it on the screen, but I did get 222. So apparently somebody went into it like maybe after option activity. So I got my first target in, but once it started to move down, I just said, you know what, this is not worth trying to fight a name that's up this much and could see profit taking. So, I ran for the hills, taking this off. And then just kind of, you could see, I just kind of didn't trade much after that. I tried Alcoa for the day. I've been watching Alcoa since it got downgraded by Deutsche Bank last week, because sometimes these broker downgrades could actually lead to something. This may just need some more time, right? For me, I just took this as I had a pretty tight stop on this one. Notice as well that this got into the value area and then trickled back out, right? So for me, that signal's gone, right? It looked great. And I said, as soon as I got into this trade, as I set up an audio file for this too, saying, hey, if it breaks back below 84, I think my stop was around 83. I just decided that this thing is not doing what I wanted it to do. Here it broke value, which was kind of the last place for me, and I held it for a little bit, but just saw the writing on the wall. So I'm happy to get back involved in Alcoa. It just has to kind of give me a little bit more positive than that. Low volume, by the way, on this whole thing. So I still think that this name could be a name that I end up putting back on, but I'm not in the business right now of putting on too many positions. As I said, I'm trying to follow what the market is telling me, what the technicals are and the averages. So I did keep a couple, more conservative type trades. I put on some Newmont, which is a gold miner, and also some NEE, which is a utility. And we talked about, I believe I talked about it in yesterday's video, the call buying. If not, I mentioned the trade on Twitter. All right. CAH was a real nice winner. That achieved my upside target. Morgan Stanley upgraded this name today. I hit like 4 targets in this thing since I put this on. I left a very small piece on, but you could see on the weekly chart, this was my target for the onset of the trade. So I'm just about fully out of this trade. I just left a small piece on to kind of monitor the trade. That's it. I got out of Tandem, which was a trade that worked quite well for me a couple times. I kept on adding into some weakness, but the weekly chart is kind of telling me something. It's not ready to break back above that 123 level. It also got stuffed there last week. I thought it might be able to take out this virgin point of control. That's fine. It didn't do it. It's back below the 200-day moving average. It's one area that I want to kind of watch in the coming days is the medical device group that showed a little bit of strength, but that got capped by the 200-day moving average. But I'm definitely watching like a TMO, right? Again, notice what happens at the virgin point of control, which I don't know why that just went away, but it did. Perhaps the time is just a little bit too big on this. And Thinkorswim is crunching the data, but there should be a virgin point of control right here, which I think got taken out. So what we want to see on these virgin point of control takeouts, if you're a fan of the stock, is you want to see it hang around here a little bit. You don't want to see it back down. Case in point, completely different, but take a look at what happened to Bitcoin, right? Bitcoin took that virgin point of control out and no follow through. It tried to hang in there for about a week or so, but you could see how powerful sometimes the overhead supply is. It takes out, kind of fills that gap, so to speak, and that's been it for Bitcoin. So again, just need more time for a lot of these things, and the goal is, while the market isn't acting great, is to try to sit on the sidelines. Also, we're going to get a lot of earnings reports. There are so many charts that look like they're on the verge of breaking down. I showed the semi chart, which continue to move down. Microsoft, and I was going over Microsoft in the midday video when the Qs were up, still up for the day, almost 1%. Microsoft was not, right? Microsoft was like flat for the day. So it is not like, we've got earnings coming up for these companies, but it is not signaling that we're going to get something good out of earnings for these companies with the way that they're reacting. The other thing that I would keep an eye on too, right? I was just going over this in the room. Look at the weekly chart for some of these names. They've been on such a march over the years. I hate to say anything bad about these companies because I know they've been such great holds for people for so long. But if I could save some money, if I could help and try to like open some people's eyes, because these names are not off the highs that far if you've been holding for 5, 10 years. But think about whether or not you want to be taking some money off the table if you've been holding for that long in some of these names, because it may be that these things may be under a correction after such a big move like this, right? And again, just being realistic that sometimes names have to consolidate after a big run up, right? Also, look at Google, right? So one thing that I notice here is that I went long this, a couple of weeks ago, thinking that, hey, this could climb back above the value area, and I will get bullish again on Microsoft if it can get back above that 299 level, so back above 300. But it's not. I actually took this out of the TTG trend portfolio today too. I put it in here, and unfortunately, I had to take it out here. It just is not giving me what I wanted to see for this name, right? And again, I let the technicals judge that for me. Always have ideas. Same thing with Google. Take a look put your eyes to the left of this chart, right? And notice what a run this has been on, right? So, a name that had such impressive growth over the years, even if it retraces down here to 2259 and then kind of rests there and consolidate, sometimes stocks do that, right? Especially after the run that it's been on. Look at last year, for example, and what the stock did last year. It had an enormous year, right? So remember, this is where it started just last year. It was an $1,800 stock, right? So it doesn't, I'm not saying it comes all the way, I'm not one of these doom and gloomers to say that, oh, it's gonna have to come all the way back down here. But would it make sense if it came down to 2262, right? And retraced about half the move from last year? I don't think there's anything wrong with that, right? So look at these things, don't be afraid to look at the weekly chart, look at the monthly chart and say, hey, maybe these stocks just might be due for a little bit of a bigger correction at this point if they can't hold in here, right? So it's a big level, I think, this Google level, right? And if you are okay with taking maybe some of that money off the table and realizing like, hey, maybe you could put that money back to work at 2258, right? It just reminds me of something too that I said to somebody on Twitter a couple of weeks ago. Right now, this is a completely different situation because the stock is not in an uptrend, right? But remember, like this was 2 weeks ago, and it's long forgotten at this point. But Robinhood went up because they announced that they're doing like more after hours trading, which every other brokerage has, right? The stock went from $12 to $15. And if you're underwater in this stock, this was a golden opportunity for you to sell. You didn't have to, if you're married to the position, you didn't have to sell maybe all of your position, but if you didn't take something off, right? Somebody told me when I made this statement, I said, this is a great opportunity to get out of, to be selling into a rip that makes absolutely no sense, right? And there was all this call option, right? For everybody who loves all the call activity, all kinds of calls went up that day. Look at what it's done since the option activity that started on this day, right? It went from, and again, I'm cherry picking here a little bit. Let's say the top was around, let's round up to say $16, right? If you sold that day, and if you still love the company, you could get back at $5 cheaper. Doesn't that make a lot more sense than just saying, hey, I'm never going to sell and it's going to be higher in 2 years? Well, if you're savvy enough, selling at $16 and buying it back two weeks later at a 40% haircut, isn't that a lot much better? Like, isn't that better to put that money in your pocket and then say, hey, well, I still like the company long term, I could buy it now for $11, right? That's just savvy. That's just being savvy. It doesn't mean that you are a hater of the company or that it changes your conviction level. You're just a smarter trader. All right. So I would think about that as we come into earnings season and you look at those charts. You could always devise, and that's what's nice about it, about options. You could always put, if you do, like, if you decide to take some profits in some of these FANG names or something like that, if you've been holding for a long time, you could still devise an option trade, like using a call spread, so that if they do have knockout earnings, right, you can participate to the upside. But I just view a lot of these charts, until this market gets better and until I see just better price action in something as simple as Microsoft getting back above the value area for the year, which is not that far away, over 300. But I just don't like how it's leaning to the downside. I think it looks very vulnerable here, versus where it looked a couple of weeks ago, trying to basically retake its uptrend. But for now, that's a failure. All right. So think about that as we kind of get to earnings, and it may be for earnings season. I think what I'll be doing is playing a lot more names to the downside. I think that the risk, is to the downside and possibly more opportunity. I think that there's going to be a lot of companies this quarter that are going to use this environment to maybe reduce guidance and say, hey, we've got plenty of excuses. We've got the inflation excuse. We've got supply chain issues. Maybe if they're seeing some type of a slowdown, they're going to use that to their advantage and say, hey, we're going to reduce our guidance into this. We'll see. I think it's going to be an interesting quarter for earnings as we get started with the banks. But really, next Tuesday is when Netflix reports, and that's going to kick off the the tech and the growth earnings. All right, guys, that's it for today's video. Have a great night. See you tomorrow.